Hello, everyone. Thank you very much for joining my webinar today. I would like to first present myself. My name is Sandra, and I'm responsible for the business development at Leverage Shares. Today's webinar will be more on the educational side. We will be looking into what ETPs are, how Leverage Shares ETPs work, and a few more details. So let's jump right into it. Short outline of today's webinar. As I said, I'll be presenting to you Leverage Shares ETPs. Then we will be talking about how to track our ETPs as overseas instruments. We will get more details about the daily performance calculation, currency impact, and at the end of the webinar, I'm going to show you also some examples of the performance of our ETPs, and we are going to also talk about benefits and risks. And of course, at the end, I'll come to a conclusion. So first to start, we all heard the definition of ETP, the term ETP. ETP stands for Exchange Traded Products and is a term including three different types of ETPs: ETFs, Exchange Traded Funds, we all know, ETCs, which is Exchange Traded Commodities, and ETNs, which are Exchange Traded notes. All of them are passively managed securities that can be traded on the global stock exchanges. With exchange-traded products, you can bet on the price development of stocks, bonds, commodities, or currencies. And the aim of an ETP is to replicate a specific index or underlying asset as accurately as possible. And of course, with this to achieve comparable performance. And therefore, the performance of ETP is easy to understand. As you see on the little visual on the slides, exchange-traded products is the main term, including exchange-traded funds, exchange-traded commodities, and exchange-traded notes. We at Leverage Shares call our financial products ETPs, and from structure here, they're most similar to exchange-traded notes. So with that, I would like to go forward and present you Leverage Shares as company and Leverage Shares ETPs. We are the pioneer in the finance field regarding leveraged ETPs. Our goal is to enable both institutional and retail investors to execute tactical trades based on their conviction, based on their knowledge, based on their strategy for their portfolio. And our products aim to deliver 2 times, 3 times, or 5 times the daily performance of individual listed stocks, ETFs, teams. We have a very broad range of products, and we offer both types of trading. That means we offer short ETPs and long. So you can decide which direction according to your strategy you want to take, if you want to use a minus 3x ETP or a 3x long ETP, according also, of course, to the market movements. To get to know better the products and the characteristics of Leverage Shares ETPs, I would like to present you a few of their main characteristics. First of all, there is no credit risk. A lot of times there's a credit risk associated with leverage products. Since Leverage Shares ETPs are 100% physically backed, you have to exclude the credit risk out of our products, so there is no credit risk associated with them. One very main point and very main characteristic is that we offer guaranteed liquidity, working with working with market makers such as BNP Paribas, which offer continuous bid-ask spreads. You also have the guaranteed liquidity for buying and selling Leverage Shares ETPs. whenever you like during the exchange work times, of course. One very big benefit and also characteristic of our ETPs is that they're offered in different currencies. If that's Euro, USD, or GBP, you can decide in which currency you want to trade the product, also based on your preferences or based on your portfolio. Another thing is that they're UCITS eligible. Furthermore, compared to other leverage products, we have very low fees and are very transparent about our fees. You can find them in every fact sheet and key information document of our product. A very important thing as well is that the loss is capped to initial investment. Meaning you cannot lose more than you invested. Since you don't need to use margin in a margin account, the biggest loss you can experience with trading our ETPs, Leverage Shares ETPs, is only the amount you invested. Meaning if you invested $100, you didn't plan exactly in which direction you wanted to trade the exact ETP and went in the other. At the end, the biggest you can lose are these $100. Furthermore, as we said in the beginning, they are efficient tools for gaining magnified exposure, meaning we offer different leverage factors going up to 5x. So you have a magnified exposure to the underlying of your choice, or the team or the sector of your choice. Furthermore, we have a wide range of products, including not only very popular names of single stocks such as Tesla, Microsoft, Amazon, Alibaba. We offer also treasury bonds and far more choice. And of course, our products are on London Stock Exchange, on Euronext Amsterdam, Borsa Italiana, or Xetra, Frankfurt Stock Exchange in Germany. So you have the choice as well on which stock exchange you would prefer to trade our products. So without further ado, I would like to go on and explain you more about how our ETPs are tracked as overseas instruments, since a lot of their underlyings are stocks or ETFs traded on the New York Stock Exchange. And this is something which is very important to know how to track the performance of our ETPs. And it's also a question we get posed pretty often. So the price of an ETP at any point during the trading day is determined by how much the underlying asset has risen or fallen from its closing price the day before. So what happens to the price of ETPs listed on European exchanges, which tracks underlying assets traded in overseas markets than in different time zones? This is achieved by the pre-market and after-hours trading provision in the US stock exchanges, which is implemented through electronic communication networks. US stock exchanges are open from 2:30 p.m. to 9 p.m. GMT UK time zone. And however, pre-market trading starts as early as 9 GMT and runs until market officially opens. Once the market is closed, the after-hour session begins and runs until 1 GMT. I'm gonna also show you some graphics and visualizations so you can understand it better and picture it better. Here is one of them. And unlike regular trading hours, the pre-market and after-hour sessions are characterized by low volumes and liquidity, which inevitably increase the bid-ask spread. One very important thing to keep in mind are ETPs and GDRs. GDRs are global depository receipts. And given these extended hours, international market makers have been able to quote spreads even after US markets are closed. This is made possible by, as I said, global depository receipts, GDRs for short. GDRs are certificates that represent a particular number of shares in the US economy and are sold through foreign brokers. GDRs provide indirect access to major US stocks with the added convenience of investors, local broker, and being denominated in local currency. GDRs should track the price of the underlying stock, otherwise there would be arbitrage opportunities. I have also one more visualization so you can picture it a bit better. Here we have an example of our Apple ETP, 3x Apple ETP. In orange, you can see the 3x long Apple ETP from Leverage Shares. In blue, you can see the Apple stock, the underlying in this case, and in green, this is the GDR of Apple. So how can an investor ensure that Leverage Shares ETPs move in tandem with the US stocks they aim to track? That's one of the questions we get asked pretty often. So during LSE trading hours, during the trading hours of London Stock Exchange, by checking that the ETP moves in lockstep with the corresponding GDR. The GDR, on the other hand, should follow the pre-market and initial trading moves of the US stock itself. When US markets open, after that, in hours that are common to both the GDR's location and the market where the US stock trades, the GDR, the US stock, and the ETP should move in tandem. And as you can see in the example, we have an overlap between the London Stock Exchange working hours, trading hours, and the New York Stock Exchange hours. And during the other time, there's always an overlap, and they're trading almost in tandem. So our ETP is able to track either the movements of the underlying or of the GDR, and so provides the best performance. In this case, aim to provide a 3x leverage performance so that it can be accurate. If you have any questions, you can also always post them in our Q&A chat, and I'm going to answer them after the webinar. So going forward, I would also would like to talk about the daily performance calculation, which is, of course, close to tracking instruments. At the end of the day, we would want to know how to calculate our performance and to know what our gains are from the specific trade we made. Short and leveraged ETPs, as you all know, are complex financial instruments which track the performance of an underlying asset, such as single stock or commodity or a thematic or an ETF. As we said, they are designed to multiply the daily performance of the underlying tracked, meaning if that's 3 times, 2 times, or 5 times in the long or in the short version. In pursuit of the daily investment objectives, short and leveraged ETPs must rebalance their assets daily to offer the same leveraged or inverse exposure on the next day. This means that their returns over time are the product of a series of daily returns and not the leverage factor multiplied by the cumulative return of the underlying asset for periods greater than a day. We often say and amplify that our leveraged ETPs have a recommended holding period, which is 1 day. Holding the ETP for 1 day would offer you to have its past performance and will allow you to benefit from its own characteristics, which we discussed in the beginning of the webinar. The daily reset, which we talked about, occurs at the end of each trading day, market closed. As a result, short and leveraged ETPs are an effective alternative to be traded on an intraday basis. While they can be traded for longer periods, investors should bear in mind that gains and losses will be compounded over time. We have talked previously in the educational webinar series about compounding, but to say it once more, the compounding effect comes only when you hold the ETP longer than a day. So our recommendation is really to trade the ETP for 1 day for the recommended holding period, so you can benefit from it from its performance 100%. So we are here. We have one more visualization on how exactly the performance is a bit more simplified, of course, how exactly you can calculate your performance. This is, of course, for the recommended holding period. We have the short and long leveraged ETP performance, which equals the underlying asset daily performance with the leverage multiplied with the leverage and minus costs and fees, which are automatically subtracted from the performance. So if you have an trading with an ETP, which is, for example, 3x Apple, and the underlying, meaning Apple, goes 2% for the day, using the 3x Apple gives you a performance of 6% at the end of the day. As we mentioned in the beginning, we do offer our ETPs in different currencies. And one thing we talk very often about is also the currency impact. And before going to the few examples, I have chosen to show you a few examples of the performance of our ETPs. I would like to get a bit more into detail about the currency impact. And as I said, investors often worry whether the value of their investments will fall, but rarely consider the impact of a rise or fall in exchange rates. International investing in assets dominated in a currency other than their local one is exposed to fluctuations in exchange rates, or so also known currency risk. Currency risk is often overlooked but can have a significant impact on returns and should be a central consideration when investing in any foreign asset. Unless intended, leaving currency risk unmanaged causes investments to be subject to movements and volatility in the underlying relevant exchange rate. Currency fluctuations can assist or negate the gains from an underlying asset for a foreign investment. Even investments available in an investor's home market can be subject to currency fluctuations if those assets are denominated in a foreign currency. In a foreign currency, such commodities, for example, commodities are typically priced in US dollars. A currency hedge can be used to mitigate the impact of currency fluctuations on foreign asset returns. Historically seen, such strategies required significant expertise and infrastructure to execute, meaning they could only be implemented by institutional investors. However, a currency hedged ETP not only provides exposure to the underlying asset, but also includes an inbuilt currency hedge. This allows investors to focus on assessing the underlying asset based on its fundamentals without having to worry about the currency risk. Currency hedges are rebalanced periodically, typically on a daily or monthly basis. The more frequent rebalancing, the more closely the ETP correlates with the price movement of the underlying benchmark. Leverage shares ETPs are not currency hedged, and hence investors are exposed to currency risk when buying an ETP that trades in a currency different from that of the underlying instrument. So this is a point we definitely have to consider when trading leverage shares ETPs. So here I have of the performance of our ETPs compared to the underlying. I have chosen one of our, so to say, star products, 3x long Tesla ETP, which is also the very often the most traded on London Stock Exchange. So as you can see on the chart, in orange we have the 3x long Tesla ETP, and in blue we have the Tesla stock underlying. One main strategy to use Leverage Shares ETPs is to trade them according to market movements short term, and most of the sharp market movements happen connected to some news. So here I have chosen 19th of July 2023, where we had the second quarter 2023 financial results of Tesla, which were exceeding expectations. So as we see, we have a little rise in underlying and exponentially magnified rise in the 3x long ETP with a performance of triple what the underlying did. Another example I have chosen is NVIDIA, which in the last couple of months, or more actually than couple of months, performed pretty well. And in such situations, you can decide to hold the ETP despite the compounding effect. But one thing I would prefer to do, or I would do, is still to trade the ETP in the recommended holding period, and that's why I also gave an example here with NVIDIA, which released Q2 earnings in August, on 23rd of August, had a rise in the underlying, and exponentially the 3x long NVIDIA ETP had tripled the performance. Very often usage of Leverage Shares ETPs is really around the earnings season or other market news, but earnings season is really the one which you can follow and accordingly trade our products. And one last example before we continue to benefits and risks. This is the Microsoft underlying Microsoft stock, and accordingly the Microsoft 3x long Microsoft ETP in orange. This time it's and quarterly revenue results. It's news of a new in-house AI research team, which ended out on 28th of November. As you can see, we have the underlying, which rose a significant percentage, but exponentially the 3x long Microsoft ETP had tripled the performance. So with that said, I would love to go to benefits and risks, and then I'll leave you a few minutes if you have any questions, and so I can answer them. As we already learned, short and leveraged ETPs provide robust, transparent, collateralized, secure, and cost-efficient exposure to underlying indices, commodities, and individual stocks, while retaining the accessibility and trading of ordinary shares. Meaning you can trade Leverage Shares ETPs as any other stock or an ETF without requiring anything additional, like a margin account or a specific or something specific. ETPs are traded on stock exchanges. ETPs are traded on stock exchanges throughout the day, just like a share, enabling investors to gain exposure to a wide range of investments with a single trade. They bring certain features that make them compelling for investors. And below, we highlight some of the, we're gonna together look at some of the benefits and of course the risks. One of the benefits are, of course, the buy-sell flexibility. Leverage shares ETPs are traded on the major UK and European stock exchanges. We had a look in the beginning, allowing investors to buy and sell during local trading hours. ETPs can be traded individually, just like a share, in a SIP, ISA, or regular dealing account. Entry and exit in ETPs is the same as in shares, with a corresponding 2-day settlement period. One further benefit is diversification. ETPs can help investors diversify their portfolio across asset classes, sectors, and geographies that otherwise could be difficult to access. For example, leverage shares ETPs cover market indices, specific market sectors, commodities, and specific companies. Using ETPs, investors can quickly and easily add to or build a portfolio that covers many different assets, classes, and geographies. They're cost efficient as they are issued at low prices, and also the fees and costs associated with leverage shares ETPs are much lower compared to other leverage products. We mentioned this in the beginning. Liquidity is always provided, and as a trader, liquidity is one, as an investor or a day trader, one of the important things to be conscious about is liquidity. Leverage, as I said, you have a magnified exposure. We offer a broad range of products, so you can choose exactly which product fits your portfolio, which product fits your strategy, and use this with the leverage factor of your choice, going up to 5x. Yeah, these are just a few of the main benefits, and to be fair, of course, I would like to mention also a few of the risks. As with any investment, ETPs involve risk. The higher the expected return of an investment, the higher the risk, and the greater the variability of returns, of course. Consideration should be given on how an investment in ETPs fits the overall investment portfolio, as ETPs have specific risks that investors should be aware of. One of them is, of course, market risk, market conditions. For example, a lack of liquidity in volatile markets may make it difficult to buy or sell ETPs in certain circumstances. At times, the return on an ETP may deviate from the return of the tracked index or benchmark. There's also regulatory and tax risk. Regulatory and tax risk, risk that a government or a regulatory may introduce regulatory or tax changes which can affect the value of securities in which the ETP invests, the value of the ETP units, or the tax treatment of the ETP. Of course, your capital is at risk. As I said, the biggest you can lose is the invested amount, but you still can lose the invested amount. So you have to definitely take this into consideration. Also, trading with leverage itself exposes its risk. Not only leverage magnifies your profits, but it can go also, of course, in the other direction and magnifies your losses. The currency risks we already discussed, and as I mentioned, also compounding. The recommended holding period of a leverage shares ETP is 1 day. So these are also a few of the risks associated with our ETPs. And now at the end, as a conclusion, I would say that leverage shares ETPs and ETPs with leverage are a great tool to use in case you want to magnify your magnify the exposure to your favorite stocks, ETFs, commodities. You have to keep in mind that, of course, there are some risks associated with the ETPs. They are more used to diversify the portfolio instead of being the only thing in your portfolio. So they're a great tool for diversification, to be a part of your portfolio. And when you keep in mind the information we discussed today and the recommended holding periods, you'll be definitely on the right way. So from my side, I thank you very much for the attention, and I'll wait a few minutes if you have any questions so I can answer them. If it seems there are no questions for now, you can always follow our social media pages in LinkedIn or Instagram to stay up to date with new market news, our products. And also, if you have any questions, you can always reach out to me. Thank you very much.